the wealthy, successful money making traders. This is your trader's friend. Thank you for joining me for another video, guys. I'm so glad you can be here with me. Today, I'd like to talk to you about tips on finding direction in a more difficult market. So this is the market that we are used to trading, and it is the one that we love. This is a better view of that price action, and this is just the most glorious kind of market. The one that you get in, you wait for a while, it falls, beautiful wait, and it just falls straight down. Those are the markets that we love to trade. However, we don't always get those type of markets. So we want to talk about, especially this, look at that. Consolidation, really easy trend direction. But let's talk about more difficult trading markets. And this is the market that I want to talk to you about today, because this is actually the market that we traded on Friday. And we want to talk about how it is that we find direction in a more difficult market like this. Let's blow this price action up a little bit. And one of the things that I want to point out before I move forward is a lot of times when you get a really nice smooth day like this and you get a lot of price action, you get a lot of pips really quickly, then pretty soon after that, you just get a lot of choppy, and a lot of professionals don't trade for the next day or two after a really, really great either elevation or fall in the market. So on a really smooth day, usually, not always true, of course, because there's nothing 100% in Forex except if you get in on the right trade setup, price never comes to close that candle. So that's the only truth that I know in Forex. That's 100%. So I just wanted to show you the day prior that we had a nice, smooth, easy market. But the very next day, this is what we got instead. So if you find that you are in a market like this and you need trend direction, there are actually two ways that you can get that direction. But let's talk about the beginning of that day. So once you see that you have the breaking close above that 10 SMA, then you want to follow that direction. You want to follow that direction until you lose the advantage. If you don't have a 10 SMA, you can use a trend line. If you're not using a trend line, just look at the price action. You can see that price is steadily climbing higher. And now you're starting to make higher lows until you get here, where you get a little dip below that low, and then price continues on. Now, even though we are currently in a bearish trend, we are looking for right now price action as short-term traders. So you follow the direction that the market is currently going until the market shows you that you no longer have an advantage. And this was a really difficult one to trade, because once we got here, we got into this period of consolidation literally for hours. So when you find yourself in a situation like this, how is it that you determine the direction in the market? One, you can look left and see what price was doing before. And number two, and one that I find pretty important, is look at where price is in relation to that 200 SMA. That's very important in determining your direction. Now let's take a look at this Euro USD as well from Friday. So the Euro USD, I made another video on my other channel and it talked about how I entered here, and pretty soon I got closed out with a few pips, and I was really, really upset because the market had just been just like this pretty much the entire time. I got a few pips out of it in a bullish manner, but then pretty soon we got this opportunity where you got this nice breaking close above this 200 that was not supported. Price came to close this 10 SMA. You made a lower high. I explained it on my other channel. So pretty much that was a really good short setup. But pretty soon thereafter, the market took a different direction. And this is what I was saying in the other video, that once you find the proper direction in the market, price does not come back to reclose that candle. You can see the rest of the day, you never came back to challenge the low of that candle. Price just continued to climb. Even if you enter at one of these bounce places, you can see that price never came back to challenge below that. And sometimes I've seen it where the market will dip below, but it doesn't close below that candle. And even if you're in a situation where it dips below, takes out your stop, if it's going back in a bullish manner, you're going bullish. If you're short and it's going bearish, you are following market direction. So the way you would trade a market like this, again, you are trading where price is going. And I can move some of these other moving averages. So on the 5 minute, I pretty much use the 200 and the 10. So that makes that a little bit easier to read. So you have this situation here where you have this break and close above this 10 SMA. And that just gives you further confirmation. You can actually take it on the signal, but this is a much better confirmation. And this is a very strong confirmation that chances are price is moving to the upside. Now, if you get in a situation like this where you think price is going to go bullish and the next candle closes you out, and you can see that it does not close below this, but in this example, it doesn't really close below that either, but you got to close below that in the next candle. If it does, go ahead and cut that trade. And you can see you come right back here and you engulf that price action. But look at where you are here. You never close that big pink candle ever. And these are the things that you want to watch out for when you are trading in the market. And one of the first things you want to do when you open your screen is look to the left. See what price has been doing before. And sometimes you can get a clue about where the market is going. But in this situation like this, you are trading in a bullish manner and you are looking to take trades. If you did not get in on the beginning of that trend, you're looking to take trades off of the bounce places. And usually it is near or at an SMA or any moving average. It can be exponential moving averages, but usually is at or near a moving average, and you are looking for these bounce spots where you have, like here at the 200 SMA, you have this engulf. Here you just have pretty much a piercing pattern at this 10 SMA, and price continues in a strong bullish manner. Here another bounce place is right near that SMA. If I still had the 20, it would probably be resting right there on the 20. So these are the places you are looking to get into the market. You're not looking to get at the market here. You're not looking to get at the market here. The bounce places are your best places to enter your market. So quick recap. The way you want to find direction in the market, you want to go with the price action. If you're currently making higher lows, or if the market is in reverse, and I will show you on another chart. Situation like this, you're now making lower highs, but you can clearly see in a market like this that we're clearly just going down, and you can see these bounce places right here in these moving averages, so these are pretty easy bounce places as opposed to this, where it's pretty much going near that 200 and bouncing back off before it continues on in harmony with that trend. So you are looking for lower highs, higher lows, or price above or below that 200 SMA to try to determine your direction. And one last thing you can do, if you're a short-term trader, either trading the 1 or the 5 minute, go to a larger time frame. And let's delete some of these other SMAs. This is a totally different chart. I should have just, I don't know. But at any rate, you can see on this larger time frame, you can go to the 1 hour chart to determine your direction. And this was, you can see that you got this strong run to the downside, and the bulls pretty much ran that candle back up to the 50% level. And then you came, you closed above that previous close, and then you got this strong breaking close right away above. Well, it was a breaking close. It wasn't that strong, above that 10 SMA. So you pretty much did a U right here. And as short-term traders, you can see based on the 200 SMA, chances are we're still pretty bearish in this trend. However, as short-term traders, we are trading right now trends. So let me make this short now. In order to find your direction, once you get in with the price, so initially on this one, it was that breaking close of that 10 SMA, and you want to stay in that trade as long as price is going in that direction. So for this chart, it happened to be bullish. So you want to be bullish as long as price is moving in a bullish manner. You want to take your trades at a near a moving average. So this would probably be around that 20 period SMA. But once you get the reversal signals, you can go with the signals, or you can wait for the break and close above that SMA. Here, all you can go by in your trade are reversal signals, just reversal signals here. That's just pretty much an exhaust candle. So you can trade off the signals when your moving average is about right there in the middle. But your safest trades, or trades with confirmation, for me, that break and close above that 10 SMA is a good entry point or a good bounce point. So you see that 10 SMA, you got this, what is that, an inverted hammer, and then price shot up. So that's what you're looking for. You're looking to take entries off the bounce places, and you're looking for trend directions, either in the direction that price is moving off of the 1 hour time frame like this, or above that 200 SMA like that. I want to remind you that you can absolutely do this. You can be successful at Forex. Have an amazing pip-filled life.